been spectacular today, and I'll just take you through that right at the end of this 1 hour presentation to you. It's been absolutely phenomenal today. Most unusual day. Randy, whilst we're waiting, oh, good morning from Oz. Yes, good morning to you. Got up early, thank you. Not if you're in Sydney, I suppose. Randy, whilst we're waiting, what I would like to do is to do a couple of polls, please, because there's no point me talking about markets that people aren't interested. Randy, could you do the poll out there that shows how many people exactly what they're trading, please? And then we'll follow that up with what platforms people are on. Can you do that? Randy? There will be a poll coming.
Let me see if I can get that going here real quick.
Thank you.
You're welcome. So which one do you want to go forward with first?
I'd like to know what people are trading first.
Markets, okay.
Yeah, markets.
Okay.
And that'll come out to you now. Just tick that. I've got on GoToMeeting, I've got up poll must be closed to enable screen sharing, Randy, whatever that is.
Don't worry about that. Just after the polls are done, we'll close it, and then you'll be able to share your screen.
Okay. Okay, well, we're just about to start. We'll just get these polls so I can talk to you about markets that the majority are interested in.
I'll give it 1 minute, and then we'll go on from that.
Okay, and then we must start for people because it's. I'm speaking to you from England, so it's 9:30 in the evening here.
We do realize that there are people that trade multiple markets, so just trade the market you primarily trade.
Yeah. Have you got the answers to that, Randy?
There they are. Looks like the 27% futures, 26% stock equities, and 25% options.
Okay. No Forex traders in there?
About 17%. So it's a pretty even lot of futures or equity options traders out there today.
Okay, followed by FX. So good, that's fine. And then if you could just do the second poll for platforms, please. But whilst you're doing that, Randy, I'll pause after and ask you that question in a moment. Okay, everybody, good evening to you, and thank you very much for coming to join us this evening to listen to me for an hour. And I will be showing you live charts really on about how to understand market direction using volume and price. And I have to tell you that in my opinion, having been trading since 1986, if you don't understand volume, you don't understand trading. It is, in my opinion, the absolute key indicator that you need to have out there. So let's just start and go through this PDF. I know that they're incredibly boring. I will rattle through it as quickly as possible because I believe that when we get to the live charts and we can show you everything, that's when hopefully the aha moment will occur for you in understanding what I'm banging on about. So, but first of all,
can you go ahead and share your screen, Nigel?
Got it?
There it is.
Okay. Okay. So, but before we go any further, I've got to go through the disclaimer. We are not licensed to give trading advice, and nor do we wish to. If you're unhappy with any part of this disclaimer, please leave the room now. I will just pause for a few seconds. For anybody who wishes to leave, please leave. Okay, nobody's dropping out, so that's fine. So let's carry on. I just want to take you through the agenda of what we're going to be doing this evening. I'm going to give you a very short introduction to volume, the application of volume. Then there's going to be closing thoughts, and the most important part is the question and answers. And that really is where the whole workshop that we're going to do this evening goes. I mean, you can sit there and listen to me, and quite frankly, it can be excruciatingly boring. When we get to the end and we do the questions and closing thoughts and I show you live charts, that really is where the nitty-gritty is. So if you want me to look at specific stocks with volume, I'll be doing that, and I'll put up any charts that you specifically want me to show. So let me carry on. Traditional trading. Well, we've got to realize 70 to 80% of traders are failing. And that's why they're using traditional trading strategies, MACD, which happens to be the most popular indicator out there for traders. I was quite surprised at that. I only read that recently, that is the #1 indicator that most traders use. The MACD, stochastics, Bollinger Bands, moving averages, etc. These strategies, in my opinion, don't work because they are all lagged. And that is why volume is so important. They're lagging indicators. And that's why when you are starting out in trading, you set up your indicators on your charts, and basically you've got to be so careful that you're not just curve fitting the whole time, changing your MACD indicators, changing the time frames that you're putting them on so they look good. Well, they look good at that specific time, but of course that's unseen data. Once you start walking through into unseen data, they start to become rather negligent in actually showing you what the market is doing. The only leading indicator that signals price movement before it happens is volume. That's why it's so important. It signals market intent. It shows you where the market is going. And all other indicators are lagging. I can't impress this enough upon you. They are all lagging indicators. And the real key to understanding volume is on triple time frames. When we start looking at volume over 3 time frames, your fast, medium, and slow, and you can see the harmony going on between them, that takes out the whiplash that you get in markets, and it is the aha moment for me, certainly in my own trading when I was putting Hawkeye together, because what I'm showing you tonight is my own trading system that I developed, which just morphed itself out into the trading community. It was never a business that I wanted to start. It just started by itself, and I'm very happy that it did, because I've got many thousands of users worldwide, and I've made many fabulous friends out of Hawkeye, so I enjoy it. But volume on triple time frame is the key. Before I get into it, I just want to tell you a little bit about my journey into trading, because I think it's pretty similar to a lot of you. First of all, when I left school, I worked for the Times newspaper in London. I built up left there and built up a solid publishing business. I ended up with about 16 magazines and video companies and exhibitions, etc. And I sold that out in the early 80s. And I invested the 6 figures with a stockbroker. I was lucky enough to be part of the America's Cup team, the sailing race that was taking place down in Australia after Alan Bond won the America's Cup from the Americans and defended it in Perth in Australia. And just before I went, I met a guy, a stockbroker, who was running a discretionary trading account for his customers, and I invested the 6 figures with him for him to trade. When I got back over lunch, he told me he lost it all, and I just couldn't believe that he had done that. And as I was doing absolutely nothing because I'd sold my business, and I had a couple of hundred people, well, nearly 300 people working there, I thought, I'll start trading myself. And I got hold of what he was doing. And in those days, you got weekly chart books, and I had a big table up, like a wallpaper table with chart paper on, and I was basically trading gold futures in those days. And I have to tell you, I was absolutely terrible at it, and I couldn't believe how stupid trading made me look. And I'm sure that many of you are going through this or have gone through it yourself. You know, all of us here this evening are pretty well educated, or else we wouldn't be here. And we just can't believe how dumb trading can make us look. And I was horrible at it. And in fact, I was so bad that I reached the point that if my indicators were telling me to go long, I go short, because I was far more successful in going against my analysis than with my analysis. But of course, that really doesn't work. So I had to stop that. But excuse me. But do remember, you have to be a loser first, and I was certainly a loser when I started. And I sat down and I thought to myself, I've just got to stop this. I can't believe what it's making me look like. I can't believe I'm getting it wrong. So I thought, I'll go to the London Stock Exchange, and in those days it was before Bin Laden was around, so you could just wander in and go up to the balcony and watch the boys in the pits trading. And I thought, I've got to go there and see what those guys have that I don't have. So I went religiously every day for 2 weeks to the Stock Exchange and went out to lunch with the boys, because in those days the stock market closed at lunchtime, went out with the traders in the evening, and really tried to drill down to find out what they had that I didn't have. So I got to know these guys, and I found the missing link. And they had an advantage. They had accountability. They had three things. They had accountability. You know, most of us work for ourselves in trading. Obviously, the majority of us probably have partners, but we report to them at the end of the week or the end of the month, and sometimes we lie through our teeth and say, yes, we've had a great day or a bad day. Normally we lie through our teeth and say, yeah, I've been fine, or it's been a so-so day. But the pit trader has accountability, and accountability means he had to trade as a business rather than just sit there by himself, like most of us have turned our spare bedroom into a trading room, and just choose when we're going to trade, cherry pick, etc. Some days we don't do anything because we're mesmerized like rabbits in the spotlight, etc. But they have accountability. They have a boss who can see what they do every day, and the boss is paying them a wage. So he wants to see consistency and trading as a business. They have free money. They have the bid and the offer. They have the spread. They have the bid and the offer, which of course we can't replicate at home. So they could do minute trades just on the spread, which is free money. But thirdly, and the most importantly, they could feel the market. In other words, they could feel the feeding frenzy. And that, of course, is volume. And when I really sat down and thought about it, I thought, I knew the volume is the key, and I started my whole journey on finding what volume was about. Now, the king of volume was a guy who was around in the 1920s, Richard Wyckoff, and he traded in the 20s and 30s. I find it quite extraordinary that three big traders that are still followed today would be Wyckoff, Gann, and Elliott. These were traders around in the 20s and 30s, and probably apart from, I don't know, Tom DeMark, something like that, very few new indicators have been made since then. You know, Tom DeMark and his sequential sequence and things like that. But he was around in the 30s. He studied volume and price. So what did I do? I found out where he was, or not where he was dead, but where his family was, and his family were in Phoenix. So I got on a plane and I traveled over to Phoenix. I found the family. They had a small little printing shop in the corner of a shopping mall, and I managed to buy their original course notes, put them in a U-Haul trailer, brought them back to England, and started to devour his work. And out of that came something that was very important, because I was doing traditional volume spread analysis, and there are other people out there on the internet who have programs on volume price analysis or VSA, but they don't take account of the open, and it's fundamental. And as I say, you know, the standard VSA doesn't consider the open. I think it's paramount, because it's very similar to an auction, And now in Wyckoff's day, he didn't take account of the open because there was no real open, because there wasn't the dissemination of data being flooded around the world immediately, so everybody can see everything at the same time. You know, the stock market opened in New York, Chicago, San Francisco, then it went across over to Tokyo, down to Singapore, back to London, back to New York. The open wasn't important, but today it is, because everybody sees everything at the same time. And I liken it very much to an auction. You know, in an auction, if the auctioneer, starts selling something and he has it priced at 100 and he says $100 and nobody puts their hand up, and it goes to 80, 60, 50, 40, 30, 20, and then somebody comes in and bids, they put their hand up, it'll probably go from 20 to 40, maybe 45, and the hammer will come down. However, if the auctioneer starts it at 100 and it goes to 80, it'll probably bid itself up to 140, 150, because it means that people wanted it. And that is what Hawkeye started to look at, and that's when I started to look very closely at the actual algorithm, because it sets the basis for the session. If you start at the bottom of a bar and it goes to the top, you know that the bias is going to be bullish, not only for that bar, for probably the preceding few bars as well. And when you start smoothing that over triple time frames, you can really see that it is the cursor that shows you the way that the market moves beforehand. So it is terribly important. So what I'm going to show you when I show you the algorithm, and I'm just going to tell you briefly what goes into it. There's over 300 calculations that go in. Now, I know that we've had an email or some comments before we started this by somebody who was saying, I hope I'm going to learn more. It is a very complicated and complex subject, the volume. If you take up my offer at the end of this video and you join the Hawkeye group, then you have the opportunity of coming along on a Wednesday and Thursday to see us trading this live. My colleague who's with me on this presentation, Randy Lindsay, who is a partner in Hawkeye, trades on Wednesday and Thursdays each week. And you can see the volume actually working live in the markets. But it is the accumulation of 20 years research. I believe it's a sophisticated and elegant way of trading. And it helps me to see trades clearly, because remember that all you are trading is risk. You're not trading Apple, you're not trading Forex, you're not trading gold, you're trading risk. What is the risk on this trade when I take it? And if your volumes are in place over triple time frame, your risk is reduced down. There's always an inherent risk when you take a trade of, say, 10%. If everything's in place, but it just takes the risk right down to its lowest denominator for you. And it also shows you when to exit, because as a trend run occurs and you go up, you can see the volume starting to click out, no demand volume, no demand volume, going across multiple time frames, 3 time frames. When you start seeing that, you know that the market has lost its structure. Particularly for the stock traders who are in the room today, we've got to realize that markets are very regimented. They're uniform. They go through accumulation, price accumulation. In other words, the markets go sideways whilst volume comes into it, etc., etc. And then it starts to move up, and it goes to a higher price, and distribution takes place when it is overbought, and then it will return to a value where it's accumulated again, normally at a higher price than the previous point of accumulation, and then it'll start to go up and down again, and so it'll start zigzagging all its way up. And one of the biggest weaknesses I see from traders as I do my seminars and my work, I've just come back from Singapore, is that traders, the inherent problem that they have is that they cannot hold into trends. They don't hold trend runs, and the reason for that is that as I said earlier, you have to be a loser first, and as you're being a loser in your trading, learning your skills, you wire your brain up to fear. And once you're wiring your brain up to fear, you then haven't done the work on yourself mentally to break the fear when you're in a trend. By understanding volume on over triple time frames, it will help you overcome that, because you can just say, no, everything is in place, all volumes are green, there's a bit of neutrality coming in. My slow time frame, my third time frame is green, my middle time frame is green, my fast one's gone white. So you can talk to yourself, it'll give you a conversation as you go through the whole time, and that is very, very, very important. It shows you how to perceive the charts, how to place your trades, the profits that you make, how to protect your positions. You know, as I was just saying, if you're in a trend run and you see volume coming in against you, it might be wise to pull your stops up. So you can pull in your stops, and then whilst it's going through its phase, you've got to remember a market can only do 6 things, which is trend run, trend pause, congestion entrance, congestion exit, and trend reversal. You have to learn those phases of the market. We teach you that in Hawkeye. And if you understand those and you couple it in with your volume, you will have a robust trading method and system that I can assure you will bring you financial freedom over the years that you will be trading. So there is the E-mini chart. And what you can see on that at the bottom is the volume algorithm. As I said, that does over 300 calculations per bar. The little dots that you can see on the actual price is called the Hawkeye volume radar, and that's showing you when extra special events occur in the market. And those extra special events are, if they are light blue, that cyan color dot is telling you ultra light volume is going through. The yellow is telling you that high volume is going through, and the red blob is telling you that ultra high volume is going through. Now that is very different from just putting a moving average over volume, which frankly is absolutely irrelevant. So the way that it works itself out is, if you look at the 2 yellow blobs near the right-hand side, the yellow dots at the right-hand side, you can say that the algorithm is calling that, whereas the red bar that occurred about 10 bars after the first cyan dot on the left-hand side is higher than those 2 where the yellow dots are, but the algorithm doesn't call it. Why? Because the preceding bars were high or of greater height than the preceding bars in front of the yellow. So it's dynamic. It's not just fixed. It's there to help you, and it just shows you all the way how to do this. Now, when we go on to the price, you can see that the price bars are painted red, white, and green. That is just a paint bar of exactly the same indicator that is on the bottom. So you have a choice with what I'm going to offer you at the end, and every indicator that you can see on this chart is what I'm going to offer you at the end. You have a choice whether to display it on the bottom of your chart or on your price. Then you can see that there are some yellow dots, those little yellow dots that occur on the price. They're Hawkeye pivots. Very, very important. You normally see from Hawkeye pivots 3, 5, 7 bar reactions from them, up, down, up, down. And when they come in, they're very important. When you see declining pivots, you know that the market's going down, and rising ones is going up, etc. So they are something very important. As I said, we go through those in great detail in our trading rooms on Wednesday and Thursdays, which are totally free. And then you can see something on the left of your chart, those big magenta bars on the actual price. Those big magenta bars are wide bars. In other words, they're twice average true range over a 20-bar period. And when they come in, be careful, because it's saying something extraordinary is happening here. And about 80% of the time, the bar preceding a wide bar will close within the range of that bar. And you can see that on the third of those magenta bars down, the next bar, the white bar, came in and started to push itself back up. But we go into that when I start showing you chart examples shortly. Now, what I have done, I've preceded myself by telling you a lot about these already, so I just want to go through. Now, the big arrow at the top that I've just put in for you, that really is a key pivot, because you can also see for all the candlestick people in there that it also is a hanging star or nearly a doji at the top of the market. And we have other pivots that are coming in down the bottom too. That one there has pushed it up. And those wide bars I've just discussed with you are very important as it pushes itself down. Now, what I want to do is just come across here, and bear with me, I've now got to change screens. So let me just do that and show you some live examples. Whilst I'm just doing that, Randy, can you tell me if you can see that screen clearly, please?
Yes, can see it very clearly.
Okay. Whilst I'm doing this, would you be kind enough to type in any markets that you'd like me to show you, please? Thank you. Just keep that typing. Now, I will start on Forex, but I'm going to start on Forex quickly and go through it for you and spend more time looking at some stocks. But when I open this up to all questions to everybody, you can ask me to go back and look at more Forex, and also ask me to drill down to whatever time frames you so wish. So let's just have a look at a major currency just at its volume. You can see here on the 1440, which is how many minutes there are in a day, you can see that we've got these pivots right at the top. So we have what I call a bird, left wing, right wing, body coming into land. And you can see that this pivot here is lower than that pivot, and it's going to start pushing this down. And sure enough, at this bar here, the red volume comes in, down we go. We then get the magenta bar, which is showing us twice average true range over 20 bars. And if you remember what I said to you, that 80% of the time the next bar will close within the range, which this one did, and it came down here. There's a pivot. Remember, 1, 2, 3, up it goes, puts a pivot high in. Now, that pivot high doesn't come to this bar here. It takes 3 bars for a pivot to occur. So at this bar here, there would be no dot. At the end of this bar, that dot occurred. And look, we have a white bar here showing us that there's no demand volume coming in, and that, when it comes in, pushes itself back down to here, and that's 1, 2, 3, 4, 5, and now we get down the bottom and we get the pivot in the bottom, no demand volume, a bit of selling volume. It doesn't have any effect, but 1, 2, 3, 4, 5, and that's what's happened today. So that's taking it off the daily. As we move it across to the 720 minute, which is half a day, it tells us more of the story. So here we are right at the top, and you can see we've got a wide bar, a pivot high here, then no demands come in here, and there's that pivot lower than that, pushing itself down, and so on and so forth. It just works. Now, I don't have time to give you a whole lecture on volume. We do that in our rooms and specific webinars that we hold on it. But it just shows you that it's showing you what is happening. On this one, it's telling you right here that buying volume is in. Whereas we come over here, I got no demand on the daily, but my half daily is giving me firm buying volume coming in, pushing itself back up. And if I come across to my 360 minute, it's showing me again that I got my buying volume after no demand coming in here, pushing itself up, and it's pushed itself up to a pivot high, no demand volume, and it starts flipping itself back over. So that is just showing it on that chart. I can take randomly anything here, but let me just push on and take you into other markets. Let's have a look at some stocks, and I particularly just did this on Apple before we started the presentation this evening. Apple, as we know, has been on a bit of a roller coaster with those announcements of great figures, etc., gaps up. But I just want to show you what the volume did, and you can see again for the people who draw trend lines, you could have drawn a nice wedge there off these pivot highs as they're coming down and these pivot lows going up. And this is something that's just happened here, which I'll come on to, which is very critical, and I will explain it to you. But you can see that, let's go to our furthest one, which is our monthly, and we can see we are going sideways on our volume here. We've got some down volume, some up volume, some down volume, and now last month we had no demand volume right up here at the top. So we've got total congestion, distribution, volume going through on this, and we would expect a market move down off this volume off a monthly. If we drill down on that and come into what is happening on the weekly, you can see again you've got your selling volume, a bit of buying volume, no demand, chop, 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 and you can come across here, and you know that if it takes out that low there, which was at 119.22, this is going to go down and start testing a trend run down. So that's very important. Now, what I want to show you on the daily is this. For those people who use conventional technical analysis on their charts and they draw trend lines, and I have to tell you, I'm dismayed with the amount of screens I see of traders that basically should be graphic artists rather than traders. They've got everything on them. They've got trend lines, stochastics, RSIs, Bollinger Bands, Fibonacci retracements on everything. It's so confusing. Excuse me. Try and keep things as simple as possible. But the point that I want to make here is support and resistance are not iron rods. So this line coming down, this trend line here, which should act as support or resistance as it breaks, is not an iron rod. I consider it an elastic band. In other words, I want to see no part of a bar touching any support and resistance that I come across, because here I've got selling volume coming in, but it's broken out. So if you didn't have the Hawkeye algorithm, as it breaks out of here, you'd say, oh, that's a breakout of the wedge, we'll go. But we painted it as red volume, and the next bar's red volume, the next bar's red volume, but they're all straddling the two support and resistance lines, trend lines that I built. That one came in, no part of it touched it, selling, and that is when we get the trend run down. And the trend run comes down here, and look, we have a little bit of buying here. Remember, markets are always bought and tested in trend runs down, but what you don't want to see is consecutive buying bars coming in. Here's a little trend run down, buying comes in, pivot, 1, 2, 3, up, 1, 2, 3, 1, 2, 3, 1, 1. It works absolutely in harmony. And then as it comes down here, wow, we get the magenta white bar, twice average true range over 20, 80% of the time it'll close, the next bar will close within the range, go in the opposite direction. Sure enough, it did here, pushed itself up, 1, 2, 3, 4, 5, 6, 7, up to the top, pivot high in, yellow dot, whoops, yellow dot, there's the Hawkeye pivot, 1, 2 down, up, 1 down, it's all chop here, and again there's that double bottom. If it goes underneath that, it's coming down, and the volume is pushing it down. And tonight, after this terrific run that we've had on the S&P, it really hasn't done too much. So that is what I'm looking at all the time in these markets. Randy, are there any specific stocks people would like me to look at on an on a daily basis, please? Whilst I'm just
Yes, this ETF SPY Spider.
No, that's an index.
No, it's not. It's an ETF, but it's okay.
I know
Netflix, NFLX.
Okay. I'll come on to the indexes in a moment. So again, here we have it. There's the pivot high on the daily. Well, let's go over to the monthly first. At the end of the month, we had a bar of no demand. So there's no demand volume there at all coming in. Then we come to our weekly. There's the magenta wide bar. 2 bars, it'll close within that range as it did here. Can you see? Closed within its range. Here it didn't, but it came back into it here. But at this bar here, twice average true range, 2 bars down. If we then drill back down into the daily, you can see that again we've come up magenta wide bar, which occurred. We closed back in. We put the pivot high in. That one's lower than this one, pushing itself back down. Okay? So that is that. Now, of course, you couple volume into your other indicators that you have, and right at the end, I'll just show you the ES because it's been a phenomenal day, and I can also show you a couple of others. But it is a tool. Remember, this is just a tool. It's not a standalone trading indicator. It's a tool which you couple in with your other indicators. It really gives you the edge. Give me another stock, Randy, please.
Tesla, TSLA.
Right, let's see. Since I got these. Okay. Well, let's come over here. No demand. There's our double bottom. 1, 2, 3, pushing itself back up here. Next month, if this comes down, that'll be another yellow dot that comes in here. So that'll be a double top coming in here, and you've got declining volume coming in. Can you see that down here? I must say I much prefer my volume indicator on the bottom, not on the actual chart, because I want to see whether it was declining volume. Although it's green, it's still going down, and markets need volume as energy to push themselves back up. So there we are on our monthly, and here we are on the weekly. And as you can see on the weekly, we've got selling volume that's come in here. We've got no demand, selling volume, no demand. Typical chop that you would expect to see. Plus you've got a lovely double top here. Typical chop that you would expect to see when the distribution of price is taking place. So I would expect to see this one starting to come down. And if I put more volume on this one, you can see here we're up at that double top on the daily, just pushing itself down. A little bit of buying volume came in today, but it's got a lot to do with this stock to get back over these highs up here around the 280 mark. 280 would be a major task for it to get through. Another one, Randy?
Facebook has earnings out tomorrow. Symbol FB. Mm-hmm.
Yeah, I got it. Well, again, look, we got no demand here. Well, as this is coming up, and then over here, what we have on the weekly, we have red selling volume that came in last week. This week hasn't been fixed up. When I say no demand on this, this will stay white. I beg your pardon, till the end of the month. It's being built. So here we have selling volume that came in last week, and if we come over here, you can see that we've got declining pivot highs. This yellow dot's lower than that one. We've got some red selling volume coming in here. A little bit of buying volume pushed it up. I'd like to see it start to close with no part of the bar touching the low of this at 94.81. No part of a bar touching 94.81 on a daily would be pretty bearish for this as it comes down. But the market was certainly thinking that the figures might be good tomorrow. Whoops, sorry, and push this back up. Another one, Randy?
Baidu, B-I-D-U.
B-I-D-U, what's that?
It's the German version, I mean the Chinese version of Google.
B-I-D-U.
B-I, like a boy. Baidu.
B-I-D-U.
Yes.
Okay. Never seen this one before. Well, there you go. That doesn't look too pretty, does it? There's your pivot high, pushing itself down. No demand volume. All selling volume on the monthly. That, of course, is waiting for the end of the month to occur. This is waiting for the end of the week to occur, but you've got lower pivots all the way down here. Can you see that one's lower than that? That yellow dot's lower than that. This yellow dot's lower than that, pushing it down. This has pushed itself up to 3, pushing itself back down. And then when we come across onto our daily, we know that we are in downtrend off our monthly and off our weekly, so we wouldn't be expecting this to do anything. And then on the long side, I mean, and then you can see it's pushed up, and we've got 2 bars of extra high volume that have come through here on the daily. But we are calling these no demands. The algorithm is saying there's not convincing selling going on. This is more of a market maker's price move than a sale of stock through. So this was a market move rather than a high volume move. Tomorrow will be very important to see whether there's a follow-up. Now we know this is a wide bar here, twice average true range, but the close is in the middle or even in the top half of that range. So I would guess that tomorrow we will see an up move on this coming back in. Next, Randy.
How many more do you want?
Just give me a couple.
Green Mountain Coffee Roasters, number 70 there. GMCR.
Wow. Okay. Well, it speaks for itself. There's the pivot high on the monthly, selling, selling, selling. There it comes across on the weekly. You can see you've got your normal churn, your rotation as it goes through, but as I said, 80% of the time on a wide bar, you close within it. This bar didn't close within it, so you know that it's a week. Down it comes, pivot low in there 2 weeks ago, and that's what's holding this over here now, pushing itself back up. Let me go and show you the indexes now. So we can go and have a look at the indexes, and you can just see that the S&P is a mess. Look, it's just chop, chop, chop. It doesn't know what it's going to do. Look, just an absolute chop. But who just knows? I mean, when you see a chart like that, you stand aside. The volume is telling us on the monthly that it's still being bought. You've got a pivot high here, and if that doesn't send the market down and it breaks above, it's going to still be quite bullish, but it looks as though it's starting to roll over. And last month we had no demand volume on that, but on the weekly you can see that we still have weekly buying coming in, but nothing convincing. You've got virtually a triple top across here, so it's got a lot to do with this. This is just horrible. Stand aside, stand aside. I want to show you gold. I don't know if any of you are Hawkeye users or get my newsletter, but I wrote about GDX, the gold mining index of gold miners this week. This is really showing us the way forward on where gold's going to go, and you can just see this has been in a terrific downtrend here. Let me just put more data on for you on this. You know, you've had a huge decline on this gold all the way down here, and that's what it's doing at the moment. But on the daily, you can see again wide bars. We've got total what I call rotational volume here, where it's no demand, red, green, red, red, and now we had today something that I really like seeing, a very, very narrow ranging bar. And that normally is telling me that the transfer from the weak to the strong is taking place, and I would really like to see an update tomorrow, and you'll start to see then the commencement of accumulation going in on this gold price. So here's the actual gold metal itself, and as you can see, wide bar, no demand, red selling, but it didn't close underneath the white bar here. No demand, again a small bar on the daily. I'd like to see that start to move tomorrow to the upside, but you can see that we've had this nicely on the weekly coming down, and my goodness, look, it's all the way down here. These pivot highs, look, they're just lower and lower and lower as it's coming down. But interestingly, we have 1, 2, 3 months now, 4 months of no demand volume on our monthly. So it's just being sold by weak holders. No real great selling is going through over these few months here, although this month that's being formed now, there will be selling coming in on that, which is manifested over here on the red of the weekly. We come on to crude. That's an interesting one, and again you can see what we have here. There's all those even pivots across the top. Here's the red as the sell-off comes. There's the dead cat bounce that comes in off here. There's the red bar, no demand as it goes up, followed by the red volume bar, and bang, down it comes. If you look over to the middle time frame, the daily, you can see that you've had 1, 2, 3, 4 weeks of selling going through as that's pushing itself down. It's found a double bottom. It's got to get through here, but on our weekly over there, but on our daily, you can see double top, but these are all declining here, these yellow dots, these Hawkeye pivots, and it's pushing itself down. Some buying came in here slowly. Are there any commodities that people would like me to look at, Randy? Do you know?
Not currently on the list, no commodities other than oil.
Okay, let me just show you a couple of interesting ones. Feeder cattle and live cattle are very interesting. Oh, I haven't even looked at this one today, but that's a cracking position here. Look what happened there. Yesterday, you can see no demand volume came in, and boom, up it goes the next day, and that could be the commencement of an uptrend coming up there. Let me show you on the E-mini. So if you are intraday trading, you've got your 5-minute, 10-minute, 20-minute, again, triple time frame, and you can just see that on your triple time frame, apart from, and this is the day session I put on here, you had one bar that came in at 15.20. There was news out at the top of the hour, so there was a reaction off the top of the hour, pushing itself back down. But look at that pivot low that came in, and just buying volume all the way through the day, just pushing that up on the 20. So at no point of the day would you ever consider going short, because as I said at my earlier point of my talk, that it sets the bias for the day, and when you're intraday trading, the slow time frame sets your bias for you, and that's just pushing itself up, and then you get to the top of the market up here, it just goes sideways as it peters out for the end of the day. You can see that across here, but no shorting at all, no shorting on any time frame. So the 20-minute held it for you and gave you the conviction to be able to ride through this. Let me just come here, this chop as it's going up here. No time would it allow you to come out, because, as I said, the weakness of most traders is not being able to hold into trend runs. This holds you into trend runs, keeps you in that, because you're having a conversation off your third time frame and saying, no, Nigel, don't be weak. Hold this, hold this, hold this, because the buying's in your favor. When it gets up to here, you can say, yeah, okay, I've got selling volume coming in here. On my 10-minute, I got selling volume coming in on my 5-minute, and the market's starting to roll flat. Thank you, that's me done. And that's very, very important. Top stocks, I think we've done most of that. I just wanted to show you the FXI, which is the Chinese, and you can see here, it's virtually untradeable on the daily, but if you come over to the weekly, you can see again right at the top, two pivot high, pushing itself down. There's the wide bar, closes up, closes within the range, closes within the range. This market is going to be trapped between those two lows, but it's far too dangerous to trade as it's going on. Stocks intraday. Oh, I've got everything on here, which I didn't want to show you, so I'm just going to move off that. I beg your pardon. Commodities main, I've gone through that. And Forex 5 minutes, again, to go through this for you. You can see that, and I'll just pull out, let me pull out, if I do any of the FX, the ones that I really like, is the pound New Zealand. You get a lot of bang for your bucks on this during the day, I can tell you. And you're just basically trading these short runs that come up on the volume. So I know that I've got my volumes coming in here, and I'm just taking 10, 20 pips a time on these moves up off pivot lows on the volume. And you can do it time in, time out by doing that. Now, before I get back to the actual main presentation, I did say that I would show you what's happened with everything on it on the ES. This is the September contract. This is what it did with the full Hawkeye suite of indicators on it. I just wanted to show you this. I'm not going to talk about the Hawkeye indicators because I'm just wanting you to get the volume indicator to merge it in with your other systems that you might have. But here it is trading here. That's the beginning of the New York session. Look, beautiful, just trend run down and then total trend run up. And you can see that I'm running it on tick time, not on trade time. I like to use tick charts for my intraday trading. I know that some of you don't have the ability to show tick charts, particularly the MT4 people. But tick charts show me market momentum with price rather than just momentum or price within a time frame. I like to see tick charts, and we have a unique way of finding out the right tick charts every day, which Randy will explain to you later. So that in essence is what we're going to do, and then what I'm going to do now is come back and can you see that, Randy?
Yes.
Live chart examples?
Yes.
Okay. So before we finish this, and I'm not going to finish it because I'm going to hand this over to Randy shortly, who will carry on answering questions because it's nearly 10:30 at night here. We have a webinar special, which is the Hawkeye volume indicator that I talked to you about, which includes the volume indicator, the volume price bar indicator, the volume radar, which is showing you low, high, and ultra high volume, the pivots, which were those yellow dots, and the wide bar. That's the volume indicator. That has a total value of 360. We give you access to our members area, our Wednesday trading rooms, our Thursday trading rooms. Once you buy anything on Hawkeye, you can join the members area, which gives you access into all of this, and access to the Skype room. The Skype room is pretty good for Hawkeye traders, particularly new traders. There's always, I don't know, 50, 60, 70 people in there every day talking to each other, discussing trade setups, etc. And that has a value of £1,000. That's what we normally charge for all of that area. But I'm going to sell it to you today for $97. That's the link that you have to click on, and Randy is posting that to the room now. It's hawkeyetraders.com/right. You get all of that for $97, which is basically the cost of going out to dinner on a Friday night at a steakhouse with a good bottle of wine. So we have it in TradeStation, Ninja, MT4, eSignal, and Multicharts. They're the platforms that this plugin works in, and that is available. Click on that link, $97. So I have completed my presentation. Randy, are you happy now to take over and to answer any questions and show more charts for as long as necessary, please?
I'll be glad to. Are there any other questions for Nigel before he heads out?
Heads out, heads to bed.
You're going out.
I'm going to bed.
There was a question earlier during your presentation. It says, was it the time of Freddie Laker?
Yes.
Okay.
Yeah. Yeah. He was the pioneer. Freddie Laker was the pioneer of cheap transatlantic flights. He was the first guy who really did you know, the I don't know whether you have them in like Virgin America and all the cheap airlines. So, Randy, do you want to take this over and take me off?
I don't have your presentation screen there. Do you want to leave that showing for a little bit, or for about 10 minutes, and then I'll answer questions in the meantime, and then I'll show my screens?
Okay, so I won't click off, and you just take over. Yes?
Yeah, sounds good.
Okay.
If you just mute yourself, that'd be great. All right. I'll answer the questions now. I'll go through and answer as many as I can on the air, and then I'll go through and try to type in the answers as they go. But if there are any questions about getting on board with volume, then I'll be able to show you that exactly right now. Use the same link that we just sent you, and I'll paste it into the box again and send it right out to you right now. Just click the link or type it in from the webinar that you see there, hawkeyetraders.com/write. All right. There's a couple of questions there. Do the volume indicators work on Forex? Absolutely. A lot of people say that volume doesn't work in Forex markets because there is no true volume, and you'd be absolutely right. But with Hawkeye, we simulate volume by estimating the tick count. We have access to actual tick count within the Forex market, and we are able to estimate true volume by about 80% accuracy. So we have real volume events that we have access to. We do the exact same volume spread analysis and price analysis that we do in regular markets in the Forex market as well. You can use the IB trading platform to do your trades, but it will not display any of our indicators. So you will have to have one of the platforms that we do support available. And I will post those on the screen right now. So they work on TradeStation, NinjaTrader, MetaTrader for eSignal, and multi-charts. Okay, that's what's available. The other indicators that are available, I've got those for you right now. Okay, paste that into your screen. There you go. And I'll show them on the screen right now. I'll go ahead and pull off the webinar, and I'll go over and start showing my screen. There we go. And so what Nigel had shown you there before, what's included in the package, you'll get the Hawkeye volume, which is the suite of volume tools that show you the actual volume. You'll get the volume paint bar, which is the volume, but it's translated and painted on top of the price bars. You can use that with any other type if you like bar or any other type of indicator types. You can click on those and display them, but this is specifically set up to show on open, high, low, close bars. Also the Hawkeye pivot, the Hawkeye wide bar, which is over here on this chart here. You can see a couple of wide bars there, and the Hawkeye volume radar, the small dots that you see painted on top of the volume, showing you significant volume events that you need to pay attention to. All of these are fully available on the 5 platforms that we had shown you. They are not available yet for Thinkorswim, but we are working with them and hoping that before the end of the year we'll have something for Thinkorswim, but not right now. Absolutely works with candlesticks or any of the other chart types that you would like. And you can see when you put your candlesticks on that it just simply colors the candlestick the same color as your volume. So you can see the exact same color of the volume gets painted on the candlesticks. If you don't want to have your volume paint bar on, you just want to see the normal candle, then you just turn the volume paint bar off and have that listed there. Okay, if you're interested in multi-charts and it's not listed on the chart, go ahead and purchase any one of the other ones and specify that you want that on multi-charts, and we will make that setup for you. No problem. And when if you're looking at this relative to the other markets, absolutely. Let me pull this back on and turn that back on for you. What a lot of people like to do with this is they'll integrate this in their normal form of trading. Nigel had shown you how we use this, like if you're using it in a regular market. With all the tools together, you can see exactly when the trend starts, when to take an entry and when not to take an entry. But what volume, right here, you see volume right here showing you what's going on beforehand. Volume leads that trend. You can see exactly when the volume starts to accumulate and coming in long before the price and the trend actually come in line with the actual trade. So you already are set up and you know ahead of time when the entry to either go long or even the entry to go short, because volume is already here showing you what's coming ahead when the price comes back in. But we're not showing that. I'm showing you the other indicators. What a lot of times a lot of people will do if they do not have the Hawkeye suite is to use other instruments like a MACD or a moving average line. So you can see these indicators set up on the screens and showing. I don't have that one there. Let me pop this chart up. It might be on there. There we go. So a MACD will show you when you have an accumulation signal. But when you have this accumulation signal going and you see that volume is supporting your crossover point, then that gives you a lot more confidence to take that as a trade. And when you see this crossover point to start selling, but you're seeing that volume is still supporting that, it can show you that you're in a little bit early and you need to wait until volume starts to show clear support for that sell-off to begin. So volume integrates and helps you to see whatever trading methodology you're using, whether that is a valid entry or not. So you can integrate that with whatever software that you're using. There is no monthly payments involved. It is a one-time payment, and it is a lifetime license for the software. That's correct. So just a one-time payment. What period of time has this suite been used and tested? Tony, we've been around since 1996 using the suite of software tools in these markets for quite some period of time. So we're not just a come here, come there type system. Okay. Now these systems are open-ended, which means that we don't have actual statistical data to show you what this is used as, because an individual trader will trade with these systems anyway, any number of different ways. But we do have a live Forex trading room with a live Forex trader who is currently trading live in front of our subscribers. He is consistently profitable every single month. Not only is he consistently profitable, but he's consistently profitable with 80 to 97% accuracy. Some months like January and March of this year, he had no losses the entire month. So his worst month that he has on record so far, he had 16 losses and 52 wins with a total accuracy of about 76% accuracy. And in that month he took in over $278,000 live trading just the Forex market. I think he's trading a little bit of gold in there too. So that's just an example. I'm not saying that that's repeatable. I'm not saying that you can go out tomorrow and start doing that, but I am telling you that these are results of live traders trading this right in front of you, and we're looking at these tools as the way that we look at that. But volume is the starting point, where we want you to understand what volume trading is all about. Once you have the volume tool in your possession, you start to see the value of it, then you can start looking at adding the other tools to the market. You know, like the Hawkeye trend that shows you when the volume and the price start coming together and give you specific entry signals. Or like the Hawkeye heat map, which shows you the strength of either the down or the uptrend when you need to be moving in line with that. And then you can see the roadkill where you're looking at multiple time frames. We teach all of these techniques and all these styles in our live training room, which you do have access to when you make your starter package purchase today. And what you get with that starter package purchase, which is shown in the link that I just gave you, you do get these 5 indicators. You do get access to our Wednesday and Thursday training rooms absolutely free, and you get a copy of Nigel's volume secret book. Okay, so all for $97 to get you going on that. But every single Thursday we spend 3 hours live in the markets, teaching you and training you on the application setup and use of these volume indicators on the live edge of the market. It does include the training manual, all of our trading rules, and access into our live training room where you'll get 3 full hours of training every single week. Support after purchase is very good. We do have a team of support staff where we have access to either emails, to voicemail, or to Skype. So we can support you any way that you are. If you do need to have us help you install and do that, we do have a service available where we'll send one of our highly trained technicians onto your computer for a full hour. And for a small fee, we will install everything for you. We will even install your platform, get everything set up just the way you like it, and get you started right. That's called the Fast Start service. You can find that on our website, HawkeyeTraders.com, in the section called Store. Our support staff is located in all over the world. Actually, we have some support in Europe, in the United States, and Australia. So we have support staff that can help you most of the hours of the day. Absolutely, Paul. The question is, can the system be turned into a trading robot? Yes, we also provide you with the function names associated with the software, and you're able to use that in to write your own EA or a strategy if you're so wanting to do that. There is additional cost if you wanted to add the additional indicators, absolutely. But if as a member, when you get to the starter package, then you have access to upgrade to those additional indicators at a really good discount. For example, the Hawkeye Roadkill or the Hawkeye Fatman. The Hawkeye Fatman normally sells for $500 in our store. You get an access price of $297 discount. So that's a great discount to that, over $203 discount off the price of that indicator. And that's just for being a member. So by subscribing and becoming a member today with a one-time, no monthly fee, $97 entrance, you get access not only to our members area, but to all the discounts as well. Within the members area, you do get access to all of the pre-recorded videos and on-demand video training that we've had in our Premier membership site. But you get access to all that today. It does not work for Options Express, although you can trade with Options Express. You'll have to do your analysis on one of the 5 platforms that we support. You can use on one computer or you can use it on multiple computers. It's up to you. Well, you're not limited to that. You have lifetime access to our Wednesday or Thursday training rooms, with the starter package. And you can pay with PayPal, absolutely.